Price increases are expected to sustain revenue growth for fast-moving consumer goods players in Nigeria in the second half of this year. Now, that's according to Vetiva research in its H2 2024 consumer goods outlook, which notes profitability is likely to remain subdued as underlying macroeconomic factors such as high inflation will continue to exert pressure on bottom line performance. Oluebube Nwosu, consumer goods analyst at Vetiva Capital, joins me now to unpack the report. Oluebube, thank you for joining us today.
Thank you very much for having me. Good afternoon.
Well, it's quite interesting to see that despite the macroeconomic headwinds, the food, beverage and tobacco sector remained resilient, expanding 2.6% in the first quarter of this year, boosting overall manufacturing GDP. But just, walk us through the key drivers, walk us through where this resilience is coming from.
Okay. Well, we saw the food, beverage and tobacco industry grow by over 2% in the first quarter GDP. This was quite in line with our expectation of 2 to 3%, for the year 2024, and largely driven by price increases. So it may come as a surprise to certain people that, okay, the industry is still growing by increasing prices. How is that possible? But it's a situation whereby these are basic needs, these are essential goods that Nigerians need to still purchase in order to get by every day. So there's a level of price inelasticity when compared to a lot of other goods. And this has meant that these companies are able to pass on some of their increased costs of their inputs to the ultimate prices. And as a result, that aggregate top line, the aggregate revenue is positive for the industry as a whole.
The report also notes that there's been a strategic shift in consumer preference towards more value, affordable, mainstream and value products. Obviously, as a consumer needs a change or habits or spending patterns change, companies obviously have to adapt to these trends. So talk to us about this shift that the report talks about and how companies are adapting.
So we've seen an increase in sachetization, we've seen an increase in minified product sizes, we've seen an increase in also using lower cost inputs to keep products on shelves. So if you look at the cross-section of like a picture cross-section of products in shelves of supermarkets today versus 10 years ago versus 20 years ago, we'll see an increased size of sachets in shelf space. And that just simply shows that there's been greater patronage of value products. These are things that are considered cheaper, but are still essential for the regular consumer to get by on a daily basis. And since more persons have been unfortunately pushed into poverty and more persons also have to reduce their discretionary spendings, it means that the volume being demanded at the value space has increased radically. And every single consumer goods company has had to respond to that by having a segment of their product that strictly, targets that market, basically.
How much priority preference is a typical consumer place? Does a typical consumer place on quality? We've seen shrinkflation happen. I know that in consumers, obviously, to try to maximize income, go for. You mentioned minified products, but is there also consumers also looking out for quality of the products, especially since prices have also gone up?
So quality has seen a huge decline in terms of prioritization by consumers. The major quality check is just to be sure that this is not going to be harmful to my health. Beyond that, we've seen the desire for quality drop, and that's why we've seen easy switch between brands, why people go to shop and just basically based on which one is cheaper. So if you go to the supermarket or to an open air market, it's your budget. By the time you're there, you see that price has increased so much that you might have to drop certain things off of your shopping list. What we see happen a lot of times is that consumers will rather just look for a cheaper option to a certain kind of product rather than drop it off of their list completely. So their concern would be that other people haven't complained about it being harmful to the health or not being able to do what the product is supposed to do. And once that is confirmed, we see people basically just, buy any other thing on the shelf that is in that same product category.
For the manufacturing sector, GDP, which is up 1.49%, what is your outlook for near term and the medium to long term for these manufacturers who are obviously struggling to keep costs, balance costs and price increases and still, keeping the consumer coming back again and again What is your outlook, and also your outlook for inflation? Some analysts are saying that inflation, the latest inflation that we got for the month of June, appears to have peaked, and we might see a deceleration or a pullback from the data that will be released for the month of July. What are your projections?
Okay, so for the manufacturing space, we're still looking at the 1 to 2% increase in GDP for this year, while specifically for the food, beverage, and tobacco industry, we're looking at a 2 to 3% increase. The reason why we're looking at a moderated increase is, again, due to the sustained headwinds. However, we're not looking at it getting significantly worse, seeing that we've seen a bit of stability in recent months in the space. However, we know that the fall or the moderation in growth of capital importation for manufacturing would definitely have its impact. That's why we're looking at a mild increase of 1 to 2% for manufacturing and 2 to 3% for food, beverage, and tobacco. While for overall inflation, where the Vetiva research has an estimate of about 32% for full year, and then for next month, we're looking at it, like you rightly said, decelerating a little bit and bringing us below 34%. That's what we're looking at for the near term. If we see this stability that we've seen in recent months, basically stay sustained.
All right, so we'll leave it there. Thank you, Oluebube, for talking to us today. We appreciate your time on the show. Oluebube Nwosu, Consumer Goods Analyst at Vetiva Capital.